What's going on, guys? In this video we're going to talk about Bitcoin and gold. JP Morgan expects Bitcoin to outperform gold in the second half of this year. We also just received the PPI report. This is Producer Price Index. We'll talk about that, and then we'll look at how it's changed the Fed probabilities of rate cuts. We'll also take a look at the Atlanta Fed's estimate for Q2 GDP. As many of you know, Q1 was a contraction, a negative quarter of GDP. Traditionally, a recession is marked as 2 negative quarters of GDP. That was sort of changed during 2020. But regardless, you do want to keep an eye on Q2. What are we going to get? Is it going to be negative for the second quarter in a row? Or are we going to have a positive quarter? And then we'll take a look at Bitcoin. It's still following its ascending channel, although it has been sideways lately. It is still holding this roughly 102. Now, first off, this JP Morgan article. They believe that Bitcoin will outperform gold in the second half of this year, and they cited rising corporate demand and growing support from US states as a major factor. Between mid-February and mid-April, gold was rising at the expense of Bitcoin. However, in the past 3 weeks, we have seen the opposite. Bitcoin's rising at the expense of gold. All in all, we expect the year-to-date zero-sum game between gold and Bitcoin to extend to the remainder of the year. Remainder. I don't know why I said remainder. But there's a bias towards crypto-specific catalysts creating more upside for Bitcoin over gold into the second half of the year. Since April 22, gold has dropped about 8%, while Bitcoin has ran 18%. Capital moving out of gold ETFs and moving into Bitcoin. Futures reflects the same thing. Gold positions decrease while Bitcoin positions increase. Now, JP Morgan's saying this run-up for Bitcoin isn't because of gold weakening, but more about crypto-specific catalysts. Bitcoin doesn't care about gold, is their point. Companies like Strategy, MetaPlanet are increasing their Bitcoin holdings. And this is crazy. MicroStrategy is planning to raise $84 billion for Bitcoin purchases by 2027, and already 32% of the way there. And keep an eye on these companies that are getting into these Bitcoin strategies. For example, MetaPlanet. They reported their strongest quarter to date. Their Bitcoin holdings have risen to 6,796, which is a 3.9 times increase year to date, and over 5,000 Bitcoin added in the year 2025 alone. Since adopting this Bitcoin standard, MetaPlanet's Bitcoin net asset value has surged 103.1 times, and its market cap has grown 138 times. Keep an eye on companies doing the same, announcing a Bitcoin strategy. Their stock prices can likely benefit from it. Companies seeing this happen will also follow suit because they want the same to happen for their stock. It kind of creates a domino effect. We also, of course, know that states are warming up to Bitcoin. And JP Morgan concludes with this quote, "As the list grows, with other states potentially considering adding Bitcoin to their strategic reserves, this could turn out to be a more sustained positive catalyst for Bitcoin." Now, I wanted to bring up assets ranked by market cap. Bitcoin is number 6. Recently passed Google and silver. I think Bitcoin doesn't have a chance at all to break gold. I don't think anyone thinks this, but let's just be clear. It needs to do roughly a 10x to get to gold's market cap, or it needs to do a 5x and gold needs to drop by 50%. Either scenario is extremely unlikely this cycle, but can Bitcoin become the top dog on this list perhaps next cycle or the following? I think that's a very good likelihood, but very like a 0.001% chance that it's going to pass gold this cycle. Can it surpass Amazon, Apple, Nvidia, Microsoft? I do think so. It would need to do a little more than 150k Bitcoin to get there. It'll take quite a climb to get into the number 432 and one day number 1. But the fact Bitcoin is here on this list, if you would have told someone 5 years ago this is where it would be, people would laugh at you. Now, we also have to talk about PPI. This article kind of highlights some certain things. I'll leave it down below for you. But PPI saw its largest drop since April of 2020. On a yearly basis, PPI rose by 2.4%, which is the lowest level since September of last year. And removing food and energy, PPI declined 0.1%, bringing the annual increase to 2.9%. This report follows a decrease in CPI. CPI dropped down to 2.3% annually in April from 2.4% in March. Inflation is continuing to cool. This is a positive. We may see things tick up shortly. Here's a statement from Walmart on Thursday. They will raise their prices this summer in response to higher costs resulting from the tariffs. And this is very interesting because sentiment is just horrible. However, the hard data, as said here, is holding up quite well. Now, here's something interesting that I wanted to mention. Look at this revision from a 2.7 for the March read to a 3.4%. Look at that, is a massive revision. Is that why the market's not reacting that great? Is it something else? There's definitely a lot of economic data today because the market isn't reacting very positively to the fact that our report is lower than the forecast. Is getting closer and closer to that 2% goal. And look at PPI on the longer term. We actually saw it nearly get deflationary like we saw back in 2020. And this was in 2023. We saw this nearly go negative. And then it just started spiking out of nowhere. In recent months, it has been trending down, which is a positive, getting closer and closer to the Fed's 2% goal, along with CPI and PCE. They are all easing somewhat, but you know, it is a bit concerning to see this 2.7% being revised to a 3.4. Will we see this 2.4% being revised into the threes as well? Now, I did want to pull up the Atlanta Fed expected GDP. This is going to be important to keep an eye on. Are we going to have 2 negative quarters of GDP? The traditional metric of a recession. So far, it's looking actually positive. Now, the blue chip consensus is anywhere from a -1 to a positive about 2.5%. This is the top 10 and bottom 10 average forecasts. GDP now from Atlanta Fed is looking pretty positive. It dipped down to 1%, however, it's back in the 2s. Looking at the Fed Watch tool, you'll see that probabilities of rate cuts have slightly increased from 1 day ago. However, from a week ago, we are still pretty down in all regards. Market is still anticipating the likelihood of the first cuts being in September, which has changed from July. And even June, there was some expectations, but that has pretty much been wiped off the face of the earth. Now we're basically looking at possible September rate cuts, a 50% chance of 1 cut, a 25 basis point cut, a 22% chance of 50 basis point cut, or 2 25 basis point cuts by then. And going to the end of the year, we're basically expecting 2 to 3 cuts as the most likely scenario. Just a few days ago, this was seen as the most likely scenario, 3 cuts, or 0.75%. So this is ever changing on different economic data. With all this data though, the market is still anticipating cuts this year, and this should benefit assets like Bitcoin. This will help stimulate the economy. High rates keep people from taking out loans, from spending more money in the economy. If you're shopping for a car and the rate is 8% APR rather than like a 2% APR, that is a massive difference, and it changes what people can actually afford to spend. Some people might say, I'll wait for buying a car. These rates are way too high. I'll wait to buy this house or to refinance or to take out this massive loan because rates are too high. Lower rates help stimulate the economy, help people spend more money. Now looking at Bitcoin, it's still hovering around this 102 and 106. We need to break 1 to get a move. Keep in mind, we are only about a 5% move from breaking all-time highs. This can happen tomorrow. This can happen in a very short amount of time. This is not a big move to see new prices that Bitcoin has never seen before. And also, we are getting ever closer to this golden cross. I suspect we will see it this month. And I've showed you guys this before, but to me, this is very eye-opening. Every time we have gotten a golden cross this cycle, we do see a massive rally afterwards. Here in October of 2023, we got our golden cross, and we did see a nice, pretty sustained run, besides a little pullback here in January of 2024, but overall, massive gains. Same with 2024, October. After all this Mt. Gox drama that brought us down to 49K, which brought a death cross, which was in fact a massive buying opportunity. Every death cross is a huge buying opportunity and typically marks the bottom, whereas every golden cross is also a fantastic buying opportunity. We have seen this every time so far this cycle. I don't necessarily expect any different here. This also lines up with the typical cycle. Ending 2025 strong, that is what I personally expect. As does JP Morgan, as we talked about in the beginning of this video. But let me know what you guys think. Is Bitcoin going to finally break this all-time high? Is it going to happen this month? Or is this roughly 5% move not going to come to fruition and the market just keeps us in limbo, keeps dangling that carrot in front of our face like we're some kind of horse? I do think a break of all-time high is inevitable at this point. A little consolidation first would be healthy and would give us extra oomph for when we do break out. Let me know what you guys think about PPI. What do you think about Bitcoin versus gold? Do we see gold or Bitcoin outperform to end the year? Thanks as always for watching, guys, and I'll see you next time.